Disco, and I hope you're living your life independently. Whee! With my heart. How you guys doing? I hope you're doing fine. Before I start, please, I want to explain to you how important it is to do like, comment, subscribe, because if you don't do that, the YouTube algo will never suggest that to nobody, and we'll be left with unprofessional people like Reddit forum ruling the world. We want some sense. So please help me make sense of the market. Please, if you don't comment, like, subscribe, YouTube will not suggest me to others. Please do that. Please do remember that. I'm not at attention H trying to get attention. I want to make this channel popular, and I cannot do that without the like and subscribe and comment that makes the algo suggest that to other. Please do remember that. If you are passive and only think about yourself this way. If you like my analysis and if you want me to continue, do that. So be selfish and like, subscribe, and comment, please, and share. All right, so there are a lot of talk in the market now of what's going on, and these retail investors going bananas. And if you are Kareem and Abdul Jabbar, you know that I don't think very highly of institutional investors, and I know they make a lot of mistakes and they go bust all the time. That's what I was saying the whole time, and they were reckless in shorting some stocks, and they got, they went belly up because of their recklessness. They don't care, and I'm not here to make you hate institutional investors. I don't like some retail investors either. So we want to make structure. We want to be more precise, focus. Forget about FOMO. So if you like my analysis, please do what I asked you to do earlier. Otherwise, I'm gonna do every 3 weeks, 2 weeks. Please think about yourself and like, comment, subscribe. Beautiful. This is the daily chart for the dollar, and this is the fan line study, and we have this downtrend we broke out. We have another downtrend line, we broke out of it, and now we broke out the last one, and we tested it, and we closed above the 10 and 20-day moving average, and this is the breakout line. It's very obvious. So once we break this area, we're gonna go through measured moves, and we will be more bullish for the dollar. What's bullish about the dollar now? The earlier bullish divergence I was talking about, and some people don't care about it, and I told you don't listen to them. And we have the bullish mode for the MACD, which I really love. I always say trade trade with the direction of the MACD all the time, never against the MACD. Good deal. So for this chart, we need to break out of 91, so we get into measured moves. Beautiful. Let's look at that. Let's look at the other. This is the measured move I was talking about. So left shoulder, head, right shoulder, right here, and 1-to-1 measure move. I didn't put it here. Oh, dear me. God. So 127 is this bad boy. 138 is this bad boy. 162, which is the most important, is this bad boy. 2 is this bad boy. 262 is this bad boy. And we run multiple measure moves, and we see we could always have an ABC, ABC, ABC. You know what I mean? So we could run multiple measure moves, and we see which target is the most agreed upon with these Fibonacci things. So this is your job to do later, to try to do ABC up, ABC down, all the stuff. So this is almost an ABC. ABC, but we're looking at the classic chart pattern of inverted head and shoulder. Good deal. So we talked about the fan line. We talked about the inverted head and shoulder scenario. Now we talk about the weekly time frame, which is extremely bullish, and I talked about it many times. I tweeted it for the two people that are following me. Even in Twitter, I don't have followers. I don't know why, but it's okay. Because if you look at my tweets, and even I'm holding back in my Twitter too. If you look at my tweets that they don't do like or comment, uh, even the algo for Twitter would not recommend that. And I don't know. So many people are passive, and it doesn't bother me. It doesn't bother me really. I don't lose sleep over that. But I just hold back. I just hold back. If they want to treat me like they own me, they don't own me. I hold back. And sometimes I say, okay, I have something to say every 2 or 3 weeks. So please don't be passive here, nor on Twitter, nor on LinkedIn. If you really want this free stuff, okay. So this is the weekly time frame. This is the weekly time frame for the dollar, and this is the price structure of late 2017, early 2018. You could look at it, pause, and this is the price structure of this recent weekly action. And you can see the duration is almost the same. And now we might be going through an up move, at least to 94, I think. So we might be testing this bad boy to the upper end of the box. We might not. I'm just looking at structures now and past behaviors. And as I always talk about the bullish divergence right here. And now, what's good about this one is the bullish crossover for the MACD in the weekly time frame, which usually results in a price expansion to the upside. Even here, you could pause and look at it yourself, and you can see how important it is usually of these up moves. So we have an up move now, up and coming for the weekly time frame for the dollar. Okay. And what's bullish about this one here? We closed above the 10 period moving average for the first time since October 2020. So this is definitely a thing to watch. So we talked about the daily time frame fan line for the USD. We talked about the inverse head and shoulder for the USD, and we talked about the weekly time frame for the USD, and now we talk about the monthly time frame, which is really important. As I always say, the most important thing in trading and also position investing or trading is buying with the buyers gather and sell before the sellers before the for seller's zone. So the price action in the month of Jan bounced, found buyers at a very congested area of price memory in 2018, and the high in 2010 and and 09. So definitely it showed buyers stepping in, and they stepped in and they closed in this number right here, which is bullish because you have a red monthly candle, then a rejection from lower price, and you close in a bullish Rami in the monthly time frame that needs confirmation. So this one right here didn't get confirmed, and the month after that, after this one, had that bullish up leg. So you need confirmation for this candle. And I think most likely we would get it with the help of the weekly and daily time frame for the dollar. Let's talk about the Dow Industrial. And we all know what happened to the market and all that disruption that came from the young, beautiful kids that which I really love. I don't have anything against those young, beautiful people, but they really are disrupting the market. And I really, for my selfish reasons, I really need them to take it easy. because I live off of this. And if their lifestyle would not be destroyed because they're young and reckless, but my lifestyle would be destroyed. I need structure in my life, and if they don't go away, they're gonna give us more disruption, which I really doubt. I really am almost 100% those that force will disappear very soon. Okay, so that's why we had those disruptions in the market. The old structure that used to work now barely working because of these people. But I promise you, they're not gonna last for a long time if history repeats itself. So this is the Dow Industrial Daily time frame, and we see the amazing bearish divergence in the price action and in stochastic and the MACD and many indicators, which usually finishes with the major pullback. It happened 100% of the time in the past, and I think it would happen in the future with the disappearance of these nice kids, the retail investors, the new force, and I think it will disappear very soon. I really have no doubt. So what happened here? Bearish divergence, and we have the first time for the price action to close below the 10-day moving average for consecutive days. 1, 2, 3, 4, 5, 6 trading days for the first time since right here, since November 3rd. So this is major. That means a change of direction. Okay, good deal. So fundamentally, there are not a lot of fundamental news except the stimulus checks coming up, and this might be priced in. So what can they do to stimulate the stock market? I think not much. So the pullback is imminent now because of fundamental reasoning now and technical reasoning. So we have we were so deranged, crazy at that time, and the stochastic did not have a reading below 60, 50 usually, for at least since November 9th till 26th of Jan. This is the first time for 12 years. So you know this is not normal. So after that, we might call this distribution phase. We might have a major pullback. I really don't know the future, but I'm not gonna short. And if you know me, if you Kareem and Abdul Jabbar, the two people are watching me, I don't like short. See what happened to short people, short sellers. What happened with the not very intelligent retail investors squeezing them out. You know what I mean? I don't want to put myself in that position. So okay. So after distribution phase, we will have a markdown phase right now. So and now we have also the bearish crossover between the 10-day moving average and the 20-day moving average for the first time since October 27th. And what happened was a major downtrend right here. And this happened too. So usually these things results in pullback. Good deal. So this is the daily time frame for the Dow Industrial. Let's talk about the weekly time frame. As I always talk about the structure and how the past help us understand the future, and why this time it did not work because of those kids, and those kids will never ever stay for long. I promise you that. So we will have our lives back after the disappearance of those kids. And I wish them the very best. So we almost have a bearish crossover in the MACD for the weekly time frame, which results always 100% of the time in the past, in the past of pullback. And you can pause and see. And this things came with a bearish crossover too in the stochastic. And once this bad boy goes below 80, the pullback would come into force right here. Good use. So you could pause and look at a past, and you can see how it worked in the past. Would these kids stop it? They cannot stop it forever, ever. Good deal. So what happened in the Japanese candles? We have a bearish engulfing that came with rejection of a shooting star. Bearish Harami, shooting star, bearish engulfing, which shows distribution in the weekly time frame. So even if those kids try to take our pride away from us, they cannot take our knowledge away from us. They didn't take my pride because I did not participate in their mania. So I take it personal because my pride is very, very, very important to me. So yeah, this rejection right here, that's a bearish candle, bearish candle, bearish candle, bearish candle. So we have 4 bearish candles back to back, which shows distribution. And we closed below the 10-period moving average for the first time since October 26th. Right here. And every time you close below the 10-period moving average, a pullback happens. Now, or just very close. And you can see that. Those kids will never take our pride. Good deal. So in conclusion, I'm very bearish based on the structure, based on the dollar movement, based on the weekly time frame. And please, if you like, subscribe and share. If you are one of those kids, please subscribe too so you can learn something. And hopefully you become a better trader in the future. Please love life. Please be proud. Please be independent. Please don't listen to others. Please do your own research. And please love disco. And because disco is forever!